In 2025, the average American paid $2,247 in hidden fees to their financial advisor without even knowing it. That money went straight into Wall Street's pocket while your retirement account barely moved. What if I told you there's a single investment strategy so powerful that the entire financial services industry has spent decades burying it under layers of complexity and fear? Here's the secret they do not want you to know. Every year, 4.2 million Americans walk into a financial advisor's office and get sold the same lie: actively managed mutual funds. Funds with expense ratios of 1.2%, 1.5%, sometimes 2.3%. Your advisor tells you these funds are managed by experts who can beat the market. They show you charts. They use words like alpha and strategic allocation. What they do not tell you is this: over the past 15 years, 92% of actively managed funds failed to beat a simple S&P 500 index fund. 92%. That means your advisor is charging you thousands of dollars per year to underperform an investment you could buy yourself for 0.03% annually. Let that sink in. You are paying 50 times more to get worse results. Why does this happen? Because your financial advisor does not make money when you buy index funds. They make money from commissions, from kickbacks, from the fees baked into those expensive mutual funds. The average advisor earns $127,000 per year. Where do you think that money comes from? It comes from you, from the fees you never see itemized on a statement, from the percentage points shaved off your returns year after year. This is not a conspiracy theory. This is how the system works. In 2026, Vanguard reported that investors in low-cost index funds accumulated 34% more wealth over 20 years compared to those in actively managed funds. 34% more. That is the difference between retiring at 65 and working until 72. That is the difference between financial freedom and financial anxiety. So what is an index fund? It is embarrassingly simple. An index fund is a basket of stocks that mirrors a market index like the S&P 500. You are not paying a fund manager to pick stocks. You are buying a tiny piece of the 500 largest companies in America. Apple, Microsoft, Amazon, Nvidia, all of them. The fee? 0.03% per year at Vanguard. Compare that to the 1.2% your advisor is charging on a $100,000 portfolio. That is the difference between paying $30 per year and $1,200 per year. Over 30 years with compound growth, that fee difference cost you $87,000. $87,000 that could have been yours. Here is what Wall Street does not want you to realize. The stock market is not a casino. It is a wealth-building machine that has returned an average of 10.2% annually since 1926. But only if you stop letting middlemen skim off the top. Only if you stop believing you need an expert to access it. The financial industry has built a $4.7 trillion empire on the idea that investing is too complicated for regular people. It is not. You do not need a financial advisor. You do not need complicated strategies. You need 3 index funds: a total U.S. stock market fund, a total international stock market fund, a total bond market fund. That is it. Allocate based on your age and risk tolerance. Automate monthly contributions. Never touch it until retirement. This strategy is called the 3-fund portfolio. It was designed by Vanguard founder John Bogle, the man Wall Street hated because he gave ordinary people the tools to build wealth without paying gatekeepers. Bogle estimated that over a lifetime, the average investor loses 70% of their potential returns to fees and bad advice. 70%. Think about your parents, your grandparents. How much wealth did they lose because no one told them this? But here is where it gets darker. Why do not schools teach this? Why is financial literacy absent from every public school curriculum in America? Because the system benefits when you stay confused. A financially literate population does not need financial advisors, does not carry credit card debt at 22% interest, does not fall for whole life insurance scams. The industry collapses when people realize how simple wealth building actually is. In 2025, Americans paid $38 billion in financial advisory fees. $38 billion for advice that could be replaced by a single automated investment into a target date index fund. Every major brokerage now offers these: Vanguard, Fidelity, Schwab. You pick your retirement year, the fund automatically adjusts your stock to bond ratio as you age. The fee? Less than 0.15% annually, no advisor, no meetings, no sales pitches, just compound growth working in your favor instead of against you. So what should you do right now? Step 1. Open a brokerage account at Vanguard, Fidelity, or Schwab. This takes 15 minutes. Step 2. Invest in a target date index fund that matches your planned retirement year. If you want more control, split your contributions across VTI, VXS, and BND. Step 3. Automate monthly contributions. Even $200 per month becomes $287,000 in 30 years at 8% annual returns. Step 4. Ignore the noise. Ignore the financial news. Ignore the advisor calling you. Ignore the fear. The market will drop. It always does. In 2022, the S&P 500 fell 18%. Investors who panicked and sold locked in their losses. Investors who stayed the course recovered everything by mid-2023 and hit new all-time highs in 2024. Time in the market beats timing the market. Every single time. Wall Street does not want you to know this, because the moment you do, you stop needing them. You stop feeding a system designed to extract wealth from your paycheck and transfer it to executives in Manhattan. You take control, you build wealth, you retire on your terms. The next video breaks down exactly how much you should be investing at every income level to retire a millionaire. The math will shock you. It is not as much as you think. Subscribe so you do not miss it. This is not financial advice. Always consult a qualified financial professional before making any investment decisions.